Good evening, everybody. We'll give everybody up. We're already a minute behind. I guess everybody that's going to come in is in. All right. As we can see, if we were trying to analyze what the market was going to do just based upon any of the individual indexes, we wouldn't have any really anything to grab onto. The Dow, because of the visual capabilities of analyzing this trend, is still showing us a rounding bottom with a doji up here today. Makes this very simple. If they open this positive, we're probably in for a breakout. If they open it negative, that's going to kind of confirm the negative characteristics we had today in the NASDAQ, which was a bearish engulfing signal in the overbought area. Still in a slow uptrend, but sold off pretty hard. And unfortunately, the S&P is right in the middle, not telling us whether we're heading up or heading down. So, let's see. The charts are too far to the right. That can't be. I can still see white space over here. Jim, can you help Tom as far as getting his chart set up correctly on his screen? Tom, there's a couple buttons up at the top that allow you to expand or contract the charts so they fit your screen all right. Okay, so with that, we still don't know which way this market is going to go. So what we're going to try to do tonight is just kind of do some general observations of what we should be anticipating in this market. Before we do that, looks like interest rates are still on their way up. The bond prices keep moving up nicely, which means interest rates continue to move down. So let's make this a little bit smaller so we can actually see what's happening. So they pulled back. Now they're kind of bottoming, so interest rates aren't really going anywhere. Crude oil, still in a slow uptrend, kind of a hanging man type day today. If it opens lower, they're coming back probably to see if the 50 is going to act as support. And let's see, natural gas. The dates aren't showing. No, yeah, the dates down here are off, but I can fix that real quick. Let's see, natural gas moving up nicely, still holding above the T line. And yeah, this is the natural gas. This is the May contract, which is the closest contract right now. Okay, let's see what else we got. Gold. Gold flat still, but flat in a downtrend. So I'd still suspect that your gold is still kind of sagging. Right now it's just having trouble getting up above the T line. And silver, same scenario, kind of a dumpling top, and then they gapped it down today. If they open this lower, they could be taking this down pretty hard. If they take this lower, they're going to be breaking through or at least coming down to test this level. So there's some more downside left in silver. Made good money this week so far, or last week, in feeder cattle because of the report on corn. Corn, as you can see, just took a clobber here over the last few days. Came up to the top of the trend channel, and now they've smashed it all the way back down to the bottom of the trend channel in 2 days. So the rest of the grains also took a tumble. Soybeans came off pretty hard. Today it was up a little bit, and wheat, same scenario. Notice when the wheat got right up to the 50-day moving average, they slammed it back down to the bottom of the trend channel. So there's probably still some more downside based upon the stochastics telling us there's probably some more downside left, which made feeder cattle work very nicely over the past few days. Started buying here as it was coming up through the T-line, and then added some more as they gapped it back up, and so it had some very nice days. Now after hours it's trading off a little bit, but not anything yet that would have me concerned. And then what that did to live cattle was gave it a little boost. Also, I haven't even paid any attention to lean hogs. Lean hogs not doing anything real wild and exciting. Be hard to trade. Plus, it's still kind of in this trading range. Let's see. Dollar's kind of trading flat. Let's make this big enough where we can all see it. It's gotten up here where it might be doing a rounding top or a dumpling top. Swiss franc picking up some strength. British pound picking up strength and kind of a little J-hook type pattern. And the euro still in a downtrend, and it can't seem to get back up above the T-line just yet. So I'd stay short in the euro. There's one more. Of course, Japanese yen. Coming up, and now it's just starting to nudge its head here at the 50-day moving average. Have to watch to see if it bounces, whether it's getting squeezed between the 50 and the T-line. What do you think about this premise that inflation starts with equities and then moves into commodities after a flush and gold looking for a long setup? That's probably true, and we've probably been seeing the inflation, but I don't think the inflation is causing stocks to go up. And again, this doesn't mean a hill of beans other than kind of my speculation of why stocks are acting strong right now. It's because I think for the last 4 years, with most companies not knowing what was going on or what they needed to hold in cash reserves to protect themselves, that a lot of companies are sitting out there with lots of cash. They haven't expanded, so their earnings are getting better because they're not putting money back out into expansion. So the earnings look good, and that's, again, why the interest rates are so low, is everybody's sitting on so much cash, they don't need to go to the markets to look for expansion money. They've got their own expansion money. So what has kind of kept the economy on hold for the last 4 or 5 years now might be coming to light, as far as everybody, instead of them being stretched out financially, everybody's sitting in very good financial positions. Anyways, that dissertation doesn't mean a hill of beans, because what I think means nothing. It's what the market thinks. Okay, now what were we doing? Let's see. All right, let's take a look at stocks that are acting well. When you can find a steady eddy, you want to just hang with it as long as it doesn't close below the T-line. We recommended COT a while back, and it's just kind of chipping away each day. As As long as it stays above the T line, you want to stay with it. BSX was one that we had made some good money with over here. Now that it's pulled back, notice where it pulled back to, right smack dab to the 50, now trading back up. So this is a perfect case of watching a wave 1, a wave 2, starting wave 3. This one is an easy one, especially tomorrow. If it opens positive after today's doji, good possibility of a doji sandwich, which means they're essentially breaking out through this area, going into higher levels. That's true too, Roger, that interest rates are low because Ben hasn't really had any need to put any brakes on the interest rates because there's nobody coming to market to borrow. If the economy was rip-roaring strong and everybody was in need of cash, they would be coming to the market and pushing rates up. But you're not seeing any of that, so I think that's another aspect. All right, CPNO, we also recommended not too long ago. Case of watching to see when there's a breakout. We had kind of that little doji sandwich with the doji right on the 50, telling us if there was bullish confirmation, which would be a move positive after the doji, that we would have a day like this, which would be equivalent to a day like this. And if we did, that essentially told us the T-line wasn't holding anymore as a resistance level, and if they broke out through this channel, that we'd probably be in a good uptrend. This uptrend probably is going to be equivalent to this price move right here, so there's still more upside to see CPNO. NTWK, another one that we've recommended, and the reason I'm showing these is there was reasons for these recommendations. So I'm just going to kind of go back through, and then we'll get to some of the other ones that can be recommended based on what patterns they're setting up. But this one was a very nice one. There's your fry pan bottom. There's your strong price move. What does a J-hook pattern need? A strong price move, a pullback, and starting its next leg up. Notice the next leg up started with kind of a long-legged doji, tweezer bottom, gap up through the T-line. Now it continues to move up. Now we're well past this breakout area. This move could be the same as this move right here, which would be approximately 7 points. So 7 points from here would take us up into the $19 area. Yes, this is being recorded. Then we're going to bury it so that if 100 years from now when they dig it up, they can say, geez, look at that. IBM was trading at 160. Now it's 4,085. Let's see, what else we got? Just a reminder that we are still in the process of getting the long-term picks in place. We're going to have two criteria for a long-term pick. Things like Ford Motor Company that has bottomed and showing a good long-term chart will be in there. And then companies that have come up with new products like DDD, which is part of this 3D copying technology. We're essentially looking at that J-hook possibility of a wave 1, wave 2, wave 3 that could take this all the way up into the $60, $65 range. And so the reason we like it right now long term, meaning long term could be 3 to 4 months or longer. This one's a nice setup because we've got a piercing signal, we've got bullish confirmation of a doji, the double doji pullback with a gap up, and now a gap up doji today, which means if it opens positive tomorrow, we've got the possibility of a doji sandwich. We don't know if it's, no, you can't speculate on that, whether you've got an ice hole failure. Remember, an ice hole failure is when it comes through a level then turns around, not necessarily after it's gotten to a support level, it just turns around and comes up and hits the 50, trying to find the spot that like falling through the ice, spot where they fell through and they fail, then they go to the next major moving average, which is the bottom of the pot. In this case, they went straight on down and hit the support level right away, so it's not really a blue ice failure, because we haven't had that pop back up from no man's land. We're coming from someplace that's telling us there's support down here. Peter, I do not play with Delta whatsoever, because most of the time with candlestick signals, and I think, do we have oh, that's commodities tomorrow. I think we've got a commodity session tomorrow, don't we? With a 3-for-2 stock split, okay. But Delta doesn't mean anything, because the advantage we have with candlesticks is we're watching a lot of price movements that may have just flattened out Delta completely. For example, a fry pan bottom could go on for 2, 3 months, 7 months, 10 months. And so that's going to really flatten out the Delta, but we know exactly what should happen coming out of a fry pan bottom. We should have a very strong price trend, which has absolutely nothing to do with the previous Delta. We will have the options session in April. We're going to have 2 or 3. One is going to be on which signals to use when, which signals apply or are most applicable to the correct price pattern, and then the advantages of spreads, both credit and debit spreads, and which spreads to use. There's going to be times when a bullish call spread is the appropriate trade. Then there's going to be another time where a bullish put spread, selling a bullish put spread, that's not right. Putting on a bullish put spread is the appropriate. So we're going to go through all that. Again, I'm not going to be teaching anybody any new strategies. What we're going to be basically be doing is putting the correct strategy with the correct price movement. So that will be coming up here in April. And I've got to get with Pat to kind of set those up. And the reason we're doing in 45-minute, 1-hour segments is what I've discovered is when we put all the option training in one session, it was such an overload for everybody to try to learn everything at one time that it's much better to do it in bits and pieces so that we can get that information into everybody's head, let them work on it, and then go on to the next one. Okay, let's see. I got way off track here, didn't I? DDD. This one, I think, long term. Going back to the new area that we're setting up, a longer term pick. I'm going to also ask for members' input. If you see a company out there that has new technology, we're going to be able to spot some situations because of the new interest that comes into the stock and creates a nice candlestick bullish signal that might not have been there for quite a while. That will give us the alert to go and research that company to see what's happening. But if somebody has companies out there that you know are working on new technology, we want to be able to watch that because I probably mentioned this before that back in year 2000 when the bubble burst, everybody said, "Oh, technology's dead, it's over." All that was over was the exuberance that had come into the stock prices. Technology has not slowed down. It's just leapfrogging at this point. And that's what we want to start catching. Yes, there are others. Jim, if you go back up to where Goofy Golf put in some more at 817, just up above here, you've got SSYS that are in that area and XONE. So, anyways, I'm just saying that because we are going to be going into more of the research, which has nothing to do with candlestick investing. We're going to use the candlesticks to alert us which companies, which sectors are starting to come alive. Then we'll be able to at least have the knowledge of why that sector is coming alive and what the potential is for the upside. Ford Motor Company is going to be the type of stock that we recommend based upon its long-term chart. That maybe a huge cup and handle or a J-hook type pattern is in the process of setting up. So we're going to be finding companies that might not be wildly exciting, but that's not good. That have a reason because of their long-term chart to tell us why it's time to start picking up that stock. Here's International Paper. That's not a wild, exciting stock, but for the long-term hold, it's been doing extremely well. Yes, and what there will be in the long-term area, if we like something with let's say 3D, and that we think DDD is good, we're going to have a lot of information on DDD, what other analysts think about it, the pros and cons, and then all the questions that people are asking right now. What other companies are in that industry, and we'll probably have research on those stocks also. Yes, and we will be using a combination of the daily, weekly, and monthly charts to say, well, this is why you might want to start buying stocks in this sector. Okay, so there, I got back off track again. What are we looking at there? That was International Paper. All right. Tesla had a big gap up today, breaking out of this wedge area or downtrending area. Had broken out through this area, so we're in an uptrend. So anytime you see a big move like this, a lot of people say, well, shoot, I don't want to be buying a stock that's already had a gap up. If we know what it's going to do after here, it makes it much easier. So in this case, I would suspect that if they open this positive, they're going to be in a 45 degrees, somewhat along the same trajectory as what we've been seeing. So this all this tells us is there's been consolidation. Now they've popped the price back up to what the trend channel told us we should be in, and it will go continue its uptrend from that level. There's that little Morningstar type signal, kind of a scoop type pattern with a gap up. I would suspect there's going to be a very strong price move coming out of this one. This is SNFCA. All right, thank you, John. All right, Tesla. Bill, but that's exactly why we brought Tesla up here. It was up a big percentage today, right? 20%. This is a big move for Tesla. But what we know tomorrow is if it opens positive, this profit taking is over. That tells us we've got a good possibility we're going to be in a 45 degree. So notice your stochastics is still heading up. So we've had a breakout, kind of a mini kicker gap up. So don't be looking at it that this is a top. This to me is just a continuation of its uptrend and getting up there very fast. So yes, at this point, I wouldn't want to see it come back down below where it opened. As long as it stays above that level, you're probably going to be in good shape. And if it came off of earnings, a lot of people say, well, these prices are moving around because of earnings or because of this or because of that or an announcement. Yes, but that's what we're looking for is positive signals. We don't care what it was caused by because every time an announcement comes out, it could be reacted much differently. There's times where we've seen stocks that have come out with excellent earnings and immediately gone down. And there's other times where you see a stock come out with terrible earnings and they immediately go up. So it's basically using the candlestick signals to tell you what's going on in investor sentiment. What we might think as a logical conclusion for an announcement may be completely different because the smart money's already been there and done that and gone from the point where if they come out with bad earnings, that means they know those earnings are bad. They're already working on improving them. So there's all sorts of reasons why a price does exactly what it's supposed to, or doesn't do exactly what it's supposed to, because there's other reasoning into the buying or selling of that stock. And that's what the candlestick signals do for us. They tell you something different is in the reasoning based upon what you would thought that earnings or that report was implying. So here's another case where notice we had that gap up coming out of this rounding bottom. That trajectory continued right on up basically on the same trajectory as the previous movement. GME was a good example. On Friday, we were all discussing wasn't this a big buy signal or is it time to get out? This was a big buy signal telling us that if they opened up positive, they were going through this level, but this was a continuation of the uptrend. I don't know what the longer-term uptrend was. Whoops. Just basically we've broken out into new territory. So we know exactly what should happen based upon a belt hold, left-right bullish engulfing signal. If they open up positive, they're still going higher with it. And TA. Same type of scenario with a big price move. Then you're in a 45 degree coming off of there. 1973 hog. The short interest in stocks don't mean a hill of beans to me. Because if there's nobody buying it, scaring the short interest, it doesn't do anything. I don't want to see what's happening. I don't care where the buying is coming from or the selling is coming from. I just want to see what it's doing. So if it's moving up because they're squeezing the shorts, that's fine with me. Doesn't matter whether the biggest institutions in the world are getting squeezed on the shorts or whether everybody's grandmother is buying the stock because they like it. If it's moving up in price, that's all I'm concerned about. WCG. Nice little scoop pattern. Anytime you see that flat handle and scoop, kind of a Morningstar signal, anytime you see a Morningstar type signal at the end of a flat handle, that tells you there's probably going to be some whipsaw out the other side. Oh, okay. All right. Well, I wasn't meaning. I wasn't directing that at you, 73 hog. I was kind of making a point that no matter what type of fundamentals or what people do to research to see what's going on in a stock, it's the price that we're interested in. That's me too. Okay. The WCG TZA has a little bit of disconcerting news here because notice what you have at the end of today's trading. That little Morningstar signal at the end of flat trading. That means if it moves positive, that the market should be moving bearish. This is the short funds. And GA, let's see if this works over here. That's a nice little breakout, kind of a cup and handle breakout, bouncing right off the 50. Notice the doji, kind of indecision, and then they told you which way the decision was. Then also notice what they did today. Market wasn't very bullish today, right from the get-go. But they gapped this thing up and took it right through the resistance level. So anytime you see that little gap up going toward a resistance level, you got to think, all right, everybody and their brother can see we're at a resistance level, and they're gapping up to get there. That means they're not stopping there. That means they're probably going through. So that should be a little bit of an indication that if you're looking to see if they're breaking it through and they gap it up, more than likely they're going through. You want to be buying immediately. Soda has this. Let me see if I can do this. Oops, I don't want to do that. I want to do trend. If you can pretty much draw a line down through here and pretty much draw a line right up through here, you obviously see that we've got a pennant formation setting up. And if they break out through this pennant formation, that tells you there's a new dynamic in the stock. That's usually going to cause a pretty strong move in the direction of how they've broken it out. So I'd keep an eye on soda. I'd probably be playing the options on this one. And notice what this one has done over the longer term. If I can make it shorter. Strong price move, kind of a wedge, now breaking out. That means if this is wave 1, this is wave 2, wave 3 has the potential of moving from 34 to 54, 20 points from here to maybe the $70 range. So if you make that kind of calculation, and it took 1, 2, 3 months to move, maybe you start picking out some call spreads over the next 3 months to get you there. Okay, they're selling off. Are they selling off GA after hours? All right, let me see. MN and a lot of these are stocks that are coming up in the chat room. This is the advantage of having a chat room where everybody's kind of looking for the same thing. This one's a nice chart, kind of a rounding bottom breakout. Bammo. Pulls back. Notice how indecisive it is right here at the T-line. Now you've got a doji gap up, bullish candle. I wouldn't be afraid to be buying this one because if this is wave 1, which is from the 2.5 to 360, this should be from about here, 340 to probably about 550 up in that area. Just a good looking chart. MTG, another J-hook pattern. Your left-right combo off the moving average, big strong move, pull back, left-right combo. If they open this positive tomorrow, you've got a doji sandwich. Even for a day trade, you probably got a good little move, about the same magnitude as that move right there, which would also be confirming the J-hook pattern. I'm going to put a little star next to that one. And again, some of these are, the reason I can find these is because people are bringing them up in the chat room. And again, the advantage is if everybody's looking for the same type of patterns, instead of trying to find each one on your own, you've got 200 sets of eyes out there that are trying to find good price moves. Or price patterns. So here's PRKR, kind of that little mini scoop. Also can probably be bought on positive trading. Slingshot effect. Wave 1, wave 3 should be up again toward the 550 range. And CLDX. First it says, I don't know how I do this. I try to set this up to where the first 30, 35 minutes are all chart explanations, and then we do the rest, and we're not even halfway through these charts. All right, you better call in Domino's and get ready for a long stay. Here's, let's see, this one isn't, maybe I didn't have the chart far enough on this one. This one's kind of setting up for a little J-hook type pattern, a wave 3. That looked better for some reason. Maybe I got the wrong chart. ASTX. Wave 1, wave 2, wave 3 should take you up again, probably another point and a half on this one. ZOLT. Another one's just starting. wave 1, wave 2. Now you have a gap up. Here's that same scenario. Somebody pointed out, well, I don't want that big shadow up here. You do if they open up positive, because what's a big shadow telling you? That there was profit taking going on today. Now, if they open up positive, that tells you the profit taking's over. They're going to still be taking it up because you've got a J-hook type pattern setting up. So don't let a big shadow scare you. The time the big shadow scares you is when the stochastics are well up in the overbought area, starting to roll over. In this case, we're already back down into below the oversold area. I wouldn't doubt if you don't see a J-hook pattern setting up, especially if this opens positive tomorrow. All right, who took my pen? Put a little star next to that one also. So the reason I'm showing this is a lot of people say, well, this one's acting well. Should I be buying here when it should have been bought down here someplace? Here's one that can be bought because it's got a gap up and now breaking out into wave 3. So we know the criteria that what we need to see tomorrow is definitely open positive and trade positive. And we probably wouldn't want to see it close back below the open. That would tell us that was a fizzle. We want to be right back out of it. Let's see. Bearish engulfments also open positive. Yes, if they're in the overbought condition. And we know where to set our stops. If we're in an overbought condition and a stock opens positive, we don't want to see it come back down through the open of the previous day. Cruiser, let's see. Jim, can somebody help Cruiser? Apparently he's having a hard time with the volume. It's INIF. Oh, INFI. J-hook pattern. Big hammer, doji, bullish confirmation. Wave 1, wave 2, wave 3. This one would be, if we know that this moves from 35 to 50, 15-point move, here's one where you can, if this opens positive, start looking at maybe the 50, 55, or even if it's the 52, 50, 57, 50 call spread, because we know what the magnitude of this move should be. I am Sam. Yes, we have some shorts here. Don't worry. We're just about finished with the longs. Here's another one that's moved up nicely. That's closer to your blue ice failure. Notice when it turned around in no man's land. There was nothing here. Then almost came back up and hit the 50 and failed. Came right back down, smack dab to the 200, which is the bottom of the pond. Now you've got doji, hammer, bullish confirmation. Let's make this big enough where we can see it. Doji today, very simple. If it opens positive tomorrow, you want to be buying it because it's probably eventually going to come up here. But your next day, even on a day trade, will probably be about the same movement as this candle right here. And who wrote that one? Is that C? P, Cal P. Wave 1, when they come through a resistance level, they'll usually come back and test it to see if it's going to act as support. In this case, it did. Notice what happened over here. You have the tails to the upside. And they added right back to it. That told you the profit taking that was hitting up here was being stopped up. This one, I wouldn't be afraid to be buying on a positive open tomorrow because that would tell us that this level right here is broken out and they're still going higher. CELG, this one has broken out on kind of that J-hook, what we call the bunk bed, instead of it being a cradle at the bottom. It's kind of got that cradle pattern right up here at the top. Doji, if it opens positive, you want to be buying calls on this one. CBST, there's your piercing signal, left-right combo, piercing signal. Notice where all this is occurring, right here at the, what I would say close enough to the T line to say it's at the T line. Now it's starting back up, so you've got $40 to $48, $47.50 to probably $55. Another one where you could probably, if you really wanted to stretch it out, do a 50-55 call spread if there's any value to the 55s. What was that? CBST. Some more conservative ones. Kraft Foods. That's not it. That's not it. That's not it. What have I done? Anyway, that one didn't work. There's kind of a J-hook pattern occurring in, that's not even what I thought. I thought this was the J-hook pattern. Wave 1, wave 2, wave 3. Now it becomes wave 1, wave 2, wave 3. That might be it. KFT. Whoops. KFT. I don't know whether that was it, but that's still an interesting stock if it opens positive. Again, bouncing off the 50 with a gap up after a piercing signal. Oh. KRFT. Whoops. KRFT. That's what I'm looking for. Thank you. All right. Kraft Food. All right. There's that little J-hook pattern. So it's just telling you it's going to be some more strength to the upside. And SkyWest. There was one of them in here that I have. Oh, way back there. 5-pin bottom, strong price move, J-hook pattern, strong price move. Now, what did I have back here? It's WCG. WCG, there was something I was going to illustrate from this one, but I don't see what it is. If that ain't a fine how you do. Okay, Facebook. S.FB. Facebook has been having a hard time getting back up above the T-line. Here's a case where it closed it out because it came back up through the high of that little inverted hammer in the oversold area. So here's kind of my logic, or I don't know whether it's logic or trying to keep myself out of fearful situations. If this is an inverted hammer in the oversold area, where should I put my stop? It shouldn't come back up through the top of that signal. Well, it did. So closed out the position. But then look what happened the next day. We had a bearish Harami that told us that the buying had stopped, and it told us that the buying had stopped right here at the T-line, which tells us we're still in a downtrend. Now we've got that doji, which makes this very simple. If it opens lower tomorrow, probably a doji sandwich to the downside, which is still coinciding with the downside channel, that if they open this weaker, you want to be shorting immediately. All right. And Win is another one that we've been short. Bug. Nice rollover, bearish engulfing, gap down. It definitely needs to have a strong trading day to tell us to be out of this position. So stay short, even though you're in the oversold area. Right now it's done a little doji Harami. The Stochastics in the oversold area makes this very simple. It should not come back up through this level. If it does, you close out the position, and at least they're going to bounce it back up to the T-line. RJet had been one that we had a small position on for a while. Closed out because now you have a doji. Notice what's happened here. You had a nice steady uptrend. New highs, new highs, new highs. Pull back. Then you had a doji. told you we're not quite getting to a new high, and they gap it down through the T line. That not only told you to be out of this position, but you want to start going short. It might support right here, but we have no idea where it's going to support. Just know we have a doji gap down. And remember, what's not a symbol? Remember what a doji gap down is? These are the type of stocks you like to be shorting. No, not your worst friend, your best friend. Your best friend if you're going short. Notice how this one's rolling over. Get ready to short this one on weakness. That's RES. DAS. Rolling over, they gapped it down. Look at your left-right combo just below the T line. This one was a perfect setup. It said if it opened lower, you wanted to short it because you have a left-right combination that failed the T line. Even though you're in the oversold area, they're rolling it over. And if they traded it lower, what would that tell you? Tell you this area wasn't acting as support anymore. Where the next target was going to be down here at the 200-day moving average. And YPF. Failure, 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 left-right combo. This one's still got more downside. First target obviously is here. Now, when your first target is here, it's not that that is your target and you're probably looking for it to end there. Just gives you an idea that if you didn't short it here, if you shorted it here, at least you know you've got some running room to have a profit in your pocket. That if it hit here and started bouncing, at least you could cover and be profitable. Instead of shorting here and then all of a sudden going the opposite direction, probabilities with stochastics heading down and hard selling that you're probably going to have at least a third day of selling. So if it supports here, now you can make a decision the next day, but that decision is probably still going to leave you profitable if you have to come right back out. And Halo. The bigger the signal, the higher the probability that you're in a downtrend. The bigger the signal, the higher the probability you're in a downtrend. That's one of the basic truisms of candlestick analysis is the bigger that signal is, the higher the probability that it's going to change of investor sentiment. ePay looked more like a bearish engulfing signal on TCNet, which meant if it opened lower, breaking this level, you could probably be looking for it to move all the way down to the 200-day moving average. HHS. Another nice rollover. Doji, gap down. First target on this one is probably down here at the 200, which would mean if it's supported there, you still have a probably about a 10-12% profit to find out whether you're going to have a big down move. FIO. Wave 1, rounding top, wave 2, dumpling top. Where does the dumpling top start really breaking down? When your stochastics are down in the oversold area. Just like on a fry pan bottom, where's your enthusiasm start coming into the price of the stock? After it's come out of a fry pan bottom and back up into the overbought area. So this one, if it opens weaker tomorrow, you definitely want to be going short. And SGMS. Failure at the 50. You're closed right here, about the 200. If it opens weaker tomorrow, you can be shorting this one, which tells us it's probably not going to be supporting at the 200. Your first possible short support area would be down here. So you'd have about a 5% move just to get to an area that you'd have to start really watching. And LPX, another rounding top. Didn't support at the 50. if this one opens weaker, everything's indicating they can't get above the T line. The Stochastic's almost getting into the oversold area. This is where they start on these type of situations. A failure of the support level. That's where they can start really breaking these down pretty hard to the downside. Oops. SCS. Rollover. Gap down doji. Taking it down. You're still heading toward the oversold area, which means if they open this one lower and don't support it anymore at the 50, you've got a good possible downdraft where if they pull the plug, they could be down here in 3 or 4 days, giving you a good 30% return. All right, so those are just kind of the observations I've got for tomorrow. The Dow is showing us that it's got the potential of breaking out to the upside. If we wake up tomorrow and the pre-market futures are positive, that means we're still trying to notice the trajectory of this rounding bottom. Just does not want to quit. Now we're at a doji, which is making this very easy. Thank you. I am. Most of my shorts have little red hearts on them. Breakout to the upside. That means they're going to be pulling this whole market up. So with that, are there any general questions on candlesticks? MDLZ, wave 1, wave 2, gap up. This is why this tail to the upside is not significant if they open it right back up into that tail. What's a left-right combo? A left-right combo is a doji. Anybody remember what our left-right combo was? Didn't see left-right. The left-right combos. We've done a video of where I've quantified, put in the strongest signals that are occurring most often. The doji followed by the gap up is number 1. The doji followed by a bullish engulfing signal, which is the left-right combo, is whoops, CLSN. Oh boy. Is that a left-right combo? We better make this big enough. No, that's not a left-right combo, is it? Left-right combo. We'll find it. Is there a chart for rice? Yes, it should be RH, rough rice. Whoops. Rough rice. Huh. I thought it was, no. I forgot what rough rice is. I don't trade it because it's too slow moving. There is a symbol for rice. I just don't know what it is. Rough rice. There it is. It's just not a very liquid trader. Okay, Roger. On the ones that I look at for an overnight trade. There's kind of your left-right combo, a doji spinning top followed by a bullish engulfing signal. That is a very powerful reversal because that tells you there's indecision at the end of a downtrend, and then they do a bullish engulfing that tells you exactly what they're planning to do the next day. Okay, so this is a day trade based upon, if I was going to day trade and looking at this one, seeing there's this type of movement before the doji, that if they open up positive, I'm expecting this type of movement. So I want to be buying immediately, and if I start getting something that resembles this same magnitude, then I'll start taking my profits as a day trade. Stem is kind of a, left-right, because you've got a doji, bullish engulfing signal, hammer type signal. That tells you if it opens positive, you want to be buying immediately. My question in regards to how you define a day trade. Doesn't day trade mean you do not hold the trade overnight? Exactly. But today when I made my decision on this one, it was based on that when I started buying calls right about in here, that they took it down too hard based upon the announcement. The announcement was that they were putting out a new stock offering, which is usually the initial reaction is to sell off because that sounds dilutive. But then you have to start thinking, why are they putting out a new stock offering? It's usually because they're growing fast enough or well enough that they need a lot more money for expansion. So if you're looking at a stock price like this, that's come from, it may have even been below 7.5. Notice where this is the type of thing that we want to start finding. If you see a stock that has done this, then all of a sudden does that, I mean something new has come into that stock price. This company I discovered, not knowing what it does, we've discovered they can put electronics on a sheet of film. So instead of, and I'm just kind of talking off the top of my head, instead of having your motherboard in your computer, a electronic board, now you can put your motherboard on a sheet of film and make your computer a heck of a lot smaller and probably more efficient because there's nothing that's going to break down in film. So if this is in an uptrend and they've sold it off hard, in this case because of an article saying it was overvalued, I'm just kind of looking for a rebound. So I just made a decision that if I got in here, I should have been back out, but I'm still playing off the basis that this one could bounce right back up again. And so I'll probably be out tomorrow. Yes, that was a day trade. When I bought it, I was anticipating they were going to take it up or at least bring it up a little bit before the end of the day. When they didn't, I had a decision of either closing it out or seeing whether they bounce it tomorrow. Now, if they open this lower tomorrow, then I close out the position. Roger, yes, if we want to get into semantics, yes, it was a day trade. I've decided to hold it overnight. Okay, CLG in April 120, 125 call spread could be done for $1. That's the type of return you want to look for. Now, Sarah, what was the 125 or the 120 selling for? Anyways, the advantage of a spread is that you're selling back, getting back some of the money, whereas that it might get to, it just reduces your exposure. Roger, I don't know what else to say. I just made my decision to hold it one more day to see if I could get a pop out of it. And that was also based on, at the time, that the 5-minute chart forget where I was looking at the 5-minute chart. The 5-minute chart was starting to build back up. must have been up closer to this area. So I'm going to be watching a 10-minute chart. Somewhere in here it started bottoming, and I just took the chance of buying it then. So remember, unless there's something that changes the fundamentals of why people look at a company, the trend is still going to be your friend. So if we're in an uptrend, and an article knocks it down, more than likely, once that supply and demand is over with, they'll start taking it right back up again. Yeah, so that's another thing, too, that you want to learn. No matter how many trades I put on, not every single one of them. There's still probably going to be 35% of them that don't work. Roger, I wasn't trying to avoid anything. I was just trying to explain that I made a decision, and then I made another decision to stay in the trade. When I put it on, I was anticipating it was going to be a day trade. Okay. Sorry, Roger. I tried to get to all of them eventually. It is Passover. Okay. All right. With that, Jim, let's go ahead and do the double line. And Jim, you in 12 seconds do the next double line. All right. Try to do some of these fast. REO stay short until you see a buy signal. Budweiser. Stay long until you see a sell signal. A lot of these, there's just nothing to do other than stay with the trend. This one, you've got a shooting star, bearish engulfing signal. Close above the T line, which means you only got one decision to make. That is, if it opens positive and trades positive, you stay with it. At this point, I would probably use any trading back below today's low, because that means they're trading it lower after an evening star, shooting star, left-right combo. Now, left-right combo can also be bearish. Indecisive trading day followed by a bearish engulfing signal. So this one has to open positive and trade positive to stay in it. Google, this one you stay short until you see a buy signal and a close above the T line. MasterCard. That's milk. MasterCard has that kind of little scoop pattern, but you have a bearish engulfing, so I wouldn't be surprised if they don't bring it back down to test the T line. If they do, it's still testing the top of this support level. So you have to look at this one, obviously based on a commodity, or not a commodity, option trade versus a stock, because the price movement on this one has to move pretty hefty to get a 10% return. Amazon, having a hard time getting back up through the 50. Another one that if this one opens lower, that's your blue ice failure. Came down, no man's land. There's nothing down here. Past this support level, came back up, tested the T line, the 50. There's your left-right combo, a doji followed by a bearish engulfing signal right at the 50. Closed below the T line. If it opens lower, extremely high probability they're coming down to test the 200-day moving average. JetBlue. This one you wanted to be going short based on a weaker open. You've got your doji, hanging man, bearish confirmation, kind of an evening star type signal. If this opens lower, I'd look for the 50 to be the target. Southwest, This one is more apt to just come down and test the T-line because there is no sell signal here. It opened lower than where it closed. It closed lower than where it opened. That's not a signal. If it was a signal, the Japanese race traders would have given it a name and told us what it was supposed to do. That's just a down day and an uptrend. I would look very strong at it supporting at the T-line. RDN had the possibility of breaking out here the last few days. It's just having a hard time breaking through this one. You stay long as it stays above the T-line. If it closes below the T-line, close out the position. It died. TDC, big bearish engulfing signal. If this one opens lower tomorrow, this one you go short. The bigger the signal, the more compelling the downtrend. BGCP, that's a nice rollover. Again, notice how it's resisted at the 200, shooting star, confirmation. This one, well, you can't go short. You shouldn't be in it, though, at this point. It's going down further. And in good one. WNR, double doji, very simple. This is going to move in the direction of how they open it. You squeeze right between the 50 and the T-line. If they open it lower, they're taking it lower. If they open it higher, they're taking it higher. That's a very simple trade for tomorrow. Swift. Let's see, somebody's ringing me. Where's that coming from? I'll find it. Let's see, Swift. This one was closed out when it closed back below the T-line. I think over here. This one you continue to stay short, but there's a good evidence that it might support here at the 50. And SANM. This one you can be shorting on any weakness. First observation would be the 50-day moving average. Coinstar. Big left-right combo. There's your doji, bearish engulfing. If it opens lower, look for it to move back to the back toward the 50. BDRY. Then nothing changed on this one. This one's caught in the middle. I wouldn't be long or short this one. I'd be trading something else. There's no direction. And RLGY. Another kind of a left-right combo, but a doji with bearish confirmation. Can short this on weakness with the first observation being right here on the 50, but it looks like there's enough juice that if they take it down, they could take it all the way back down to test this level. So I'd be shorting that on weakness. Western Digital. WTC. WDC, Doji, if they open this positive, means there's a good possibility they're breaking through up here. You want to be a buyer, making sure they get through that level. Cree, this one has failed. As you can see, the starting rounding top, now you've closed back below the T-line. SDGI. Bearish engulfing signal, another one that has to stay above the T-line to stay in it. Here's your wave 1, wave 2, wave 3, about the same magnitude, not quite there, but this one probably needs to open higher and trade higher to stay in it tomorrow. PSX. There's your left-right combo that started this move to the upside. Nothing wrong here. This one you just stay long until until you see a sell signal and a close below the T line. BLTR, bearish engulfing, another one that looks like it still has further to move in the wave 3, but you do have a bearish engulfing signal. This one, all you can do is stay long unless you see it close below the T line. SNDK, another one that if this opens lower, it's coming back down to the probably down to the 50. You've got a doji, then a bearish confirmation. Tells you what they did after that indecisive trading. SPF. Bearish engulfing up here. Stay short until you see a buy signal. Now that's the SPF. Something's not right there. That looks like SPC. No, that's not what we want. F. There we go. Kicker signal to the downside. This one, if it opens weaker tomorrow, you want to be shorting it because on a kicker signal, probably the 50 is not going to act as support. TAP. Big gap up bullish. Look for a 45 degree to come off of here. We did CRU, we did BBRY, HMO. Another one, J-hook pattern. If it opens positive, it's going to be moving further out of this range. That's not what we want, is it? Or is it? S.HMO. Something's happening there. Let's see. HMO. That doesn't seem right. That's a payer income. S.HMO. For some reason that's not coming up right. HUM. Humana. Nice big move to the upside. Remember, the bigger the move, the more you've probably seen a change of investor sentiment. Watch for a 45 degree to come off of this one. SID. Little kicker type signal. Again, there's the profit taking, but if it opens positive, you want to be a buyer because it's telling you that the T line's not acting as resistance, and the profit taking's over. They're going to be moving up further. Aetna, broken out into new territory. If this opens higher tomorrow into the profit taking shadow, remember your stochastics aren't up in the overbought area. That means that if they open up positive, you're going to be looking for more upside. UNXL has the possibility of coming all the way back down to the 50 as profit taking, but this was a big hefty move off an article. I'm watching for a bullish Harami tomorrow. That's what I'm anticipating. If it opens lower, I'll close out the position and then see what to do again back down here at the 50. Oh, this is not working out well. This is the type of chart you like to get caught in of going short. There's your left-right combo, close below the T line. They take it down. Can't get it above the T line. Just stay short until you see a buy signal. Wave 1, wave 3 should be down here another point or so. UNH. Another one, well, you've got a pretty hefty move up here. I'd probably stay long, but use the halfway point of this candle as your stop. If it closes back below here, you're back into the trading range. You want to stay out of the trading range. eBay, another gap up. If it opens positive, you want to be buying on your doji sandwich. FAS, there was something wrong there. Did they do a reverse split? Yeah, there's something wrong there. AGNC, this one's still paying, was about 18% at this level. This one you just continue to hold as long as it doesn't have any severe drop. And a severe drop would be something where they cut the dividend. PAYX. There's your left-right combo belt hold. Bullish engulfing. Continues this J-hook pattern. This one you stay long. You're getting to about the same magnitude. Just start being a little bit more diligent. Okay, FAS and FAZ, etc. 6-to-1 and a 5-1 to 1 reverse split. All right. I wonder why that was. That kind of takes the small investor out of the picture of trying to use it as hedging against some of their positions. Cisco, I wouldn't be long or short right now. It seems like it's caught in a sideways pattern. KORS, close back below the T-line. Observe the obvious. The obvious is you're in a downtrend, which means if they bring it down to the 200, that's about getting pretty close to where your bottom channel is. So I'd be going short on this one on weakness tomorrow, and use the T-line as your stop. MSI. All you can do here is stay long until you see a sell signal. TDCD or TECD. Another one where you just stay short until you see a buy signal and a close above the T-line. SRPT. Stay long. Notice that today's selling is not a signal. It may be confirming that it's not quite a shooting star, so I'd still use a close below the T-line on this one as my stop. Here's one where you just stay long until you see a sell signal. Notice how you practically use the T-line today as support. TSO, this one you get ready to short on weakness. You've got the bearish engulfing signal. Couldn't move away from the T-line. They close it below the T-line. Be ready to short it. ACAD. This one looks like it's attempting a J-hook pattern. If this one opens positive tomorrow, you want to be a buyer. That tells you the J-hook pattern is in effect because they use the T-line today as their support level. What did I just type in here? NAV. Whoops. NAVX. No. NVAX. I'll have a book written by the time. That is also kind of wave 1, wave 2, wave 3. Another one where you stay long as long as you don't see a sell signal. At this point, with being in the overbought area, I'd probably be put a stop right here. It shouldn't come back down through that level. Let's see, did we do tap? A breakout, look for a 45-degree off of here. We did Amazon, BYD. This one, all you can do is stay long until you see a sell signal and a close below the T-line. And PAL. This one's a gap up. This one you can be buying. Just use the halfway point of this candle as your stop, today's candle. Let's see, is it CAMPL? What about CAMP? Bearish engulfing. This one you get ready to short if it opens weaker tomorrow. use a close back up above the T line as your stop. Starbucks. Oops, hold on. Starbucks doesn't impress me right now. I wouldn't be long or short. Doesn't have a direction. It needs something to give me a signal one way or the other. An IGT. This one you stay short ever since the dark cloud that closed back below the T line. More than likely, this is your target right here at the 50. So stay short until you see a buy signal. Home Depot, another one. I wouldn't be long or short. There's no direction to it, and there's not enough magnitude of a move to make any money with it. Goldman, Goldman is still in a downtrend. You stay short until you see a buy signal and a close above the T line. We did Facebook. You can be shorting that one some more if it opens weaker tomorrow. AIG, another one that is in a pennant formation. I wouldn't be long or short this one right now. Just not a good looking chart. Conoco looks like a cup and handle or a J-hook after a fry pan bottom. Wouldn't be afraid to be buying this on positive open, and buying it would mean an option trade. UIS, right back smack dab to the 50. I would rather pay $23.05 knowing that it opened positive and it was trading up through the T line to buy this. That one you definitely want to keep on your watch list. BCLK, another one that I wouldn't be, it should have popped up today. It didn't. It closed back below the T line. If it opens weaker tomorrow, you want to close it out. To stay long, it has to open positive and trade positive and stay above the T line. FENG, this one you can be buying on positive trading. Make sure the volume is all right on this one. But that's a good looking chart. And ONTY. ONTY looks like it's buyable. You know, this one you can be buying on positive trading, also using the T line as your stop. ATHX. Another one that, this one has to open positive and trade positive. If this opens lower and comes back down to the T line, it doesn't have very much energy in it. I'd be out of the position. Eli, that one's starting. If this one opens positive tomorrow after the two, you got an inverted hammer and then a long-legged doji, you definitely want to buy on positive trading, which means it's breaking out through the 50. Should take you back up to test the highs. And CDE, bearish, this one you want to be shorting on any weakness tomorrow. Doji, bearish engulfing, left-right combo. Definitely be shorting this one on weakness. Microsoft is just not a trader. Just too slow a mover. You get bored to death with this one. But right now, if you own it, you can stay long. It's just Microsoft has just gotten too big to really move around all that much. There's your big belt hold bearish engulfing signal. This one you want to be going short on any weakness tomorrow. Today's big bearish engulfing signal basically, or left-right, not left-right, belt hold bearish engulfing signal. That gave you the message. Or should have. Yahoo, stay long as it stays above the T line. Q-Cores, having a hard time getting out of its own way. This one, now, if you owned it, you should be out of it. More than likely, they're bringing it back down to test the 50, which also would equate to this support area right here. And OREX. Notice how it pulled back. It has to open positive and trade positive. If it opens lower, they're coming back down to test the T line one more time. At least one more time. POT. Not anything there that would get me excited. They're just having a hard time getting any energy. It needs a strong buy signal to want to get into this one. ABMD had a J-hook pattern, came back down, came back up above the T line. All you can do with this one is stay long as it doesn't close below the T line. Remember, you're always going to have down days in an uptrend, but if it doesn't create a full-scale reversal signal, you stay with the trading above the T line. Oracle, Morningstar signal, inverted hammer, Harami, bullish confirmation. If you were buying, use the T line as your first resistance potential. If it gets through there, now you've got some running room where they can bring it back up into the trading range. But Oracle has also gotten big enough where it's a institutional type trader, meaning it doesn't move around very fast. NTAP, this one, you can do a doji sandwich if it opens positive tomorrow, or anticipate a doji sandwich. We did Western Digital, eBay. Gap up, if it opens positive, you can be buying. And line, another scoop type pattern. Notice the flutter kicker type signal that started it. Continue to own. It needs to get through the 50, obviously, to get you up to, there's a gap to fill up here. If it does that, it means they're through the 200. Could have some more upside. And Axel, all you can do here is just stay long until you see a sell signal and a close below the T line. Alcoa, stay short, or you could possibly go short. If you got stopped out yesterday on a short position, this is where you get right back in again, because it's telling you it's in the downtrend. And CEF, another one where you stay short until you see a buy signal. And AUY, one of the gold stocks. Another one where if it opens weaker tomorrow, you want to be shorting it because you can obviously see it's in a downtrend, resisting right around the 50, which means the next move down could be at the bottom of the downtrend, bringing you down in about the $13 area. Netflix to me is still moving sideways until it catches up with the T line, then you look for a buy signal. We did MMKD. That's got a good looking chart. That's something you definitely want to be buying on positive trading tomorrow. Zillow, this one you go short on weakness tomorrow, closing below the T line. GMCR, a doji, if it opens positive, you got a doji sandwich that's just taking you into wave 3. You want to be a buyer immediately. Dillard's, whoops, S-E-G-S. This one you can be buying. Just be aware of the lack of volatility in this one and that you're in a slow downtrend. So even if it moved all the way up here, probably coinciding with your downtrending, you've only got a 4% move. You got to decide whether, unless you're playing the options, whether that's worth the risk reward factor. Bank of America is kind of flattening out. I wouldn't be long or short this one right now if I was trading it. it needs to break out of this sideways channel. Las Vegas Sands, that's kind of an evening star signal. If it trades below the T-line tomorrow, it pretty much tells you you have a double top right here at the same level. If it opens weaker, you definitely want to be out of it, possibly going short. And Nuance, slowly coming up. All you can do with this one is stay long as it doesn't close below the T-line. Schlumberger, this one you stay short with a kicker signal. They couldn't really get it up above the T-line. First obvious target is back here to the 50 or the 200, and see what it does from there. UNXT was down and closed around the T-line yesterday, so I was paying attention this morning. It was up 34 cents when I left, and when I came back, it was down $5. From making $1,000 on paper to $6,000 loss. How do I prevent this happening again in the future? Where was your trailing stop? Or where would have been a trailing stop? If you had bought this, are you talking about UNXL? Yeah, if you'd bought it and it was trading up, if I had just opened the position right here, especially with stochastics heading down, you put your stop one tick below where it opened. Because if it came back down through there, that means they're not taking it up, they're still taking it down. So if you're heading out someplace, pick a spot that tells you that if it came back down through that certain level, the bulls weren't there, you want to be right back out of it. Do you use trailing stops? Yes. Caterpillar. Caterpillar, you just stay short until you see a buy signal and close above the T-line. BIOL. This one you can be buying on positive trading. Obviously, you want to break down or break out through this downtrending channel, which is right there. So if it opened positive, you want to be a buyer using the T-line as your stop. CDNS. This one is having a hard time getting started. At best, if this opens weaker, you want to be short. Looking for the 200 to be your target. Did Schlumberger CBI. This one with a gap up in the overbought condition and now bearish Harami. If this one opens lower tomorrow, you close out the position. It should open higher and trade higher if this gap up is still in progress. If it gapped up at the top, but now we've got a bearish engulfing. If it opens lower, not a bearish engulfing, but a bearish Harami. If it opens lower, take profits. You can always see what happens when it gets back to the T-line. Let's see. Did we do Coach? Coach 2 sideways. It needs to, I'd rather pay $50 for it knowing that they're $50.70 knowing that it broke through the 50 and got through that top resistance level. U.S. Steel, stay short until you see a buy signal. That's amazing. U.S. Steel, I think, got back up close to 100, 120, not too many years back. CENX. CENX, stay short until you see a buy signal. This is where they can start really pulling the plug and having big down days like we see over here. TLT. This one's having a hard time also getting through this level. I wouldn't do anything until it broke through at least the high over here, telling you the downtrending channel is not holding it anymore. Okay, Carol, let's see, we did SRPT. Stay long until you see a sell signal. MITK. This one, you don't want to be in it. You've got the wedge. I'd put a buy stop at 5. If it comes up through there, you know it's starting to move. We did Apple, NAT. NAT, a kicker type signal, is another one that if it opens lower, notice how it broke out of the wedge over here, had a nice strong run. Now there's a good possibility they could bring it all the way back down to the 50, which would be the top of the wedge, to see if it's going to act as support. Yeah, the emails won't come from Jim. They will usually come. The recordings will be in the candlestick area. If you have a hard time finding it, just email Abraham. There you go. Somebody already did that. And ask where the link is, and he'll get you connected up. EXPE, downtrending channel, but you're now near the bottom of the downtrending channel. You could be a buyer at positive trading using the T line as your first resistance, and then look for this area. So you're a little bit less than 10%, but a channel is a good place to be trading your options. Who are they? The institutions on the open? They mean the market in general. If everybody is opening price positive or negative, they. Okay, Lisa, if you don't hear from him, then just Gmail me on the chat room. Yeah, he is busier than a one-legged man at a butt-kicking contest. Dick, I have a hard. I can only get the. I could only use the name up there, so that's why I try to mention the names of each one. Okay. Yeah, we did CL. Didn't we do CLSN? Whoops, S.CLSN. Yeah, that one's just flat. Can't even get it. I don't think there's any. I looked at the right one. Yeah, there's nothing there. I'd rather have a buy stop at 120. I thought we did this RPT. This one you stay with as long as it doesn't close below the T line. Okay, one more CRS. CRS looks like it's failed up here at the moving averages. This one you want to be pretty short. Let's take a gander. And whenever you can see that you're in a downtrend and it's hit the top of that downtrend, I would suspect it's coming back to the bottom. Yep. Again, UNXL. Remember, here was an article. I couldn't find any news on it. Sometimes it's just one institution closing things out. So I'm just playing on the fact that if you've been in an uptrend this long and they've taken it down for a hard day, there's usually going to be a bounce in it. So, but always remember, just because I put on a trade, that doesn't mean it's going to be a money-making trade. I am accustomed to losing 1 out of every 3 trades. I'm just hoping for them to pop it up a little bit and making some money. Again, it was put on as a day trade. but with it kind of trading back down right where it, a little bit below where I got in, I'll give it one more day. All right. I guess that's about all we got for tonight. We'll see everybody in the chat room tomorrow. Have a good evening.